All right, so I've talked before about how Devon is my favorite oil and gas company. I may have found a new one, that's EOG Resources. Again, they are about double the size of Devon. They're a $69 billion market cap currently. Devon's it's in the 30s, maybe 40s. Um, they're better in some ways, they're worse in some ways. So I wanted to just go over it. Um, Their earnings yield is a little bit lower, which is something I'm not a big fan of. Their dividend yield is a little bit lower, or actually, it's quite a bit lower. It's only 2.79. I think Devon's is about 6.5 right now. They did cut it recently, but again, when you have a lower oil and gas price, that's not overly surprising. If you look at EOG, this is a company that's consistently gained more value over time. I mean, recently it's made new highs. Um, so that's very good to see. Let's just compare them directly here just to get an idea of it. So again, if we compare them directly, analysts definitely more bullish on EOG. Dividends definitely better as far as EOG goes. Again, that compounded growth is definitely better with EOG, which is why I'm coming around to them. Financial health, Devon's definitely better there. Growth, Devon's definitely better there, although they're both very, very, very good. I wouldn't be concerned about either one there. Profitability, they're about even. I mean, gross margin 63% versus 55. Free cash flow margin 24 versus 17. EOG is definitely a little bit better, but not, they're both very good. Returns, again, both very, very good. Return on equity of 40% for Devon, 28 for EOG. Return on equity 57 versus 31. Return on invested capital, both very strong. As far as evaluations go, both are trading at pretty large discounts right now, but EOG is at a larger discount than it typically has been, right? 5-year average price of free cash flow 46. That's very expensive. I'm shocked that that's very high for an oil and gas company. Devon's is average of 22. It's currently 10. So honestly, both of these companies, in my opinion, are good buys where they're at. But if you look at the 5-year stock growth, Devon's done a lot better. In fact, EOG is actually down over the last 5 years, which is kind of odd, especially considering we've made recent highs in oil and gas prices. But again, that may definitely partly due to, or sorry, it's not down. It's only up 11%. Sorry, I misspoke there. This is compared to the S&P 500. Devon's actually beat the S&P 500, which is very impressive. If we look at the dividends, let's go directly into the dividends just to get a better idea of. So again, it's currently at about 2.8%. Payout ratio 26%. It's gone up very nicely. I mean, it's gone up. I mean, they kept it the same for, it looks like, about 4 years, and then they started raising it again in 2018. They've raised it every year since, and this year they've raised a lot. I mean, at the end of 2021, it was $1.65. Now it's $3. So that's like that's insane. If we look at, let's just look at Devon here briefly, because Devon just cut their dividend. Now, I'm not sure if they actually have, yeah, they do have updated data, thankfully. So again, the payout ratio is, more than double, but the yield is, the payout ratio is only about 10% more, but the yield is more than double. Sorry, I misspoke again there. But if we look at Devon, I mean, they're a company that they cut it massively in 2015. That's understandable. But ever since the start of 2016, they've been raising it ever since, right? They raised it every year since then, it looks like. But up until this last year, it's actually been very low, and they've brought it back down again to 72 cents. It was as high as $5, right? $5 starting last year. So the dividend's coming down quite a bit, but that's, like I say, that's expected when it comes to lower oil and gas prices. The reason that I'm bullish on some of these better oil and gas companies is that we have a shortage of oil and gas, and that shortage is not going to get any better due to bad government policy, this stuff's not going to get a whole lot better. So I think these are, in my opinion, good stocks to be in over the next 10 or 20 years, because maybe a generation or two from now we're going to transition, but it's not going to happen as soon as people are saying. Um, some other good companies I like. I've brought up ARLP. They're more they have a decent coal presence as well. So, but again, they're doing well. Their analysts are bullish. The dividend is quite a bit lower than it traditionally has been, but again, that's the dividends are pretty hectic. Growth is very well. Profitability is very good. Returns are very good. Valuation, they are a little slightly overvalued after actually sorry. Price to free cash flow is lower. PE is higher. So again, but their PE is still very low. Um, if we look at another one I brought up before, this is a master limited partnership, though. Natural Resource Partners. I don't know if I have brought it up before, but this is one that it looks very intriguing. It is a small company. There is somewhat limited data on it, but again, if you look at the numbers, it looks very good. Like, it's growing utterly insanely quickly. The profitability is through the roof. I mean, look at free cash flow margin of 67%. Like, that's utterly insane. Um, Return on equity 39%, return on invested capital 39%. It is right about fair value. Well, I think it's still a little undervalued, but it's right about, as far as a pricing perspective has been, it's right about where it traditionally has been. So again, I just wanted to talk about this. I do think EOG is a little bit better than Devon. Not that I'm going to sell my position by any means. It is a little bit concerning, given Devon missed earnings lately. Um, so again, that definitely is concerning. But again, we have to look at it from a long-term perspective. If you're trading, oil and gas probably not the best place to be over the next short period of time, given it's more than likely we see a recession, and even if we don't, we're going to see a slowdown, which means it's going to hurt oil and gas prices. But eventually things will pick up again, and when they do, we have and are going to have a massive shortage of oil and gas. They already do. Look at the SPR being drawn down to record amounts, right? So again, people don't seem to realize that we have not seen the top here by any means. I think we're going to see oil and gas. We're going to have a day probably within the next 5 years, maybe 10 years, where it's going to be shocking to see, oil and gas prices not in the hundreds, even the mid to high hundreds. We might even hit 200, right? Nobody knows. Like I say, nobody knows, but the macro trends are pointing to this, in my opinion, right? Maybe the only other solution would be nuclear, right? But again, nuclear power plants still take time to be built, so there's no transition that's going to happen in a short period of time, right? It's just not going to happen, right? And oil and gas is our best solution right now, which means there's going to be demand for it, right? And not only that, there's going to be high demand, and there's going to be high demand in an environment to where the supply is limited, which means what's going to happen? Prices are going to go up. Just basic economics. So anyway, that's what I wanted to bring up today. If you liked the video, hit that like and subscribe, and stay tuned for more.